Hello and welcome back to the Protea Academy YouTube channel. I'm Michelle, and in today's video we're going to be discussing part 2 to our financial forecasting and cash flow planning. So in today's video we're going to be taking a look at what cash flow planning is, as well as some of the key factors that you need to consider when preparing your cash flow. Now, in last week's video, which was part 1, we had a look at what financial forecasting is and the methods available to you, or the most common methods available to you. And just as a refresher, we said that financial forecasting was essentially the process of estimating your expected financial status in future periods. And this would use either historical data or looking at expansion and inflation rates and other forecasted data, and from there making decisions accordingly. So in today's video, we're looking at a subcategory of financial forecasting, which is your cash flow planning. Now, when it comes to cash flow planning, instead of predicting all of your financial data, you will focus on the future inflows and outflows of cash within your business. Now, cash flow planning is such an important tool because cash is the most liquid asset that drives almost all of your transactions, and a business that runs out of cash will unfortunately die. So to make an accurate cash flow plan, you need to consider multiple factors, and we're going to touch on some of the key factors that you should be looking at when you're in the process of cash flow planning. First up to take into consideration is your regular or operating expenses. Now, this is by far the most important and the most predictable cash outflow within your business. Every day, week, month, quarter, or year, you have recurring expenses that the business needs to pay in order to keep running. Now, some examples or common expenses that you will encounter would be things such as rent, payroll, and business utilities. Another key consideration would be losses. Now, not everything goes perfectly within a business, and sometimes your business may incur losses that aren't part of your regular expenses. These losses aren't very predictable and can leave you with little to no liquidity. Examples of these losses would be things such as accidents, whether it be car accidents or natural disasters, and even spoilage. Now, since you can't really predict when these events are going to occur during the year, some businesses set aside an amount that's reserved to cover any of these losses. Key factor that one needs to consider is price changes. Now, the market is always changing, and so do the prices of goods. So for wineries, this can be the difference between a large profit margin and barely breaking even. By understanding and taking into account the price changes of materials, ingredients, and even equipment, you're able to more accurately determine your expenses as well as earnings for the period. Making cash flow plans for the next year is difficult and often changing, but most businesses need to plan more than a few months out, especially when it comes to manufacturers, which would include wineries. At a minimum, a business should be looking at forecasting out by at least 3 months, but forecasting by 1 year out would also be very important to allow for decision making. After making a cash flow plan, you should now have a good idea as to what to expect over the next few months and whether or not you're going to have sufficient funds to cover your current needs. Financial forecasting and cash flow planning are very important tools to help you when it comes to making financial decisions for your business in order to maximize your profits and ensure that your business never runs out of money. Financial forecasting can give you an idea of the general direction your business is headed in, and your cash flow planning can ensure that you are able to stay on top of your month-to-month operational expenses, as well as assist you in making long-term decisions when it comes to financing. By understanding how your financial forecasting and cash flow planning works, you can guarantee the success of your winery for years to come. As always, we trust you found this video insightful, and should you have any thoughts, comments, or suggestions for future content that you'd like to see, please feel free to drop it in the comments section below. Please also join us on our social media platforms, including Facebook and LinkedIn, as well as at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.